Well, hello, everyone, and welcome to the Investing with a Purpose show. My name is John Bowens, and joining me on the show today is Brad. And Brad is an equity trust self-directed investor, primarily focusing on investing in real estate partnerships. So I asked Brad to join us on the show to talk about his experience. And as we always do on the Investing with a Purpose show, talk about how we're making an impact on the community. That is Brad making an impact on his community. So, Brad, thank you so much for joining us on today's show. Maybe start off by telling our listeners and viewers a little bit about what you're doing with your self-directed IRAs from an investment perspective.
So I have two. I have a regular IRA, and then I have a Roth IRA. And so my goal is to put my higher risk, higher return investments in my Roth IRA, and then my lower risk, lower return assets in my IRA. I have invested in some private companies, and then I've also invested in real estate. And in my IRA, I have primarily put most of my investment in multifamily housing. I have a little bit of a background in real estate. I am a real estate broker, and I have done mostly commercial real estate in my career, triple net leased properties, but they're getting so expensive that it's difficult for the small investor to get into commercial real estate. And so we found a couple of different groups that offered smaller investment opportunities in multifamily housing. And so I've decided to do my commercial real estate investing. I do through REITs, and you can do that just in a regular trading account. I think you can do that at Equity Trust also, but I've done, to date, we have done, I think, 11 different properties. And we've been fortunate as we looked at the real estate market back in 2017. That's when we made our first investments. And triple net properties were cap rates were getting very compressed, and they were looking very, very expensive. And there's some challenges with those types of properties. Properties with long-term leases tend not to increase in value as much unless cap rates are dropping. And so it didn't look quite as promising. On the other hand, multifamily housing tends to keep up with inflation better because rents are turning over quite frequently. And so our objective was to find properties that were diverse in terms of types of properties and location across the country. We didn't want all of our eggs in one basket.
Oh, that was great, Brad. Thank you. And to clarify, these multifamily investments, are these real estate partnerships, LLCs, that your IRA is participating as a limited partner or as a member of, or is
Yes.
this where you're at? It is. Okay, so you're one member, you're one limited partner amongst other limited partners. That is, your IRA is a limited partner
Correct.
in these investments. Okay.
That is, they are all LLCs. And what that allows us to do, instead of having to, I'm not in a position to buy a $25 million multifamily housing project, but I am in a position where I can invest $50,000 or $100,000 in a particular project. And then wanting to diversify, I don't want all my eggs in one basket. And so instead of putting everything into one project, I spread it over initially 4 different projects. I think we're now up, what did I say, 10 or 11. properties now that we have invested in. 4 of the properties have closed and returned our investment and profits. And we got, I'll share this experience because it was good and it was bad. The very best performing property that I invested in was in Texas. And in 2019, a little storm came over the project and stopped and rained for 4 days and flooded the project. And it went from a 12% return annually to a 0% return annually. And it has taken 2 years because of COVID and supply chain issues to get that property rebuilt, repaired and rebuilt. We had, the LLC had insurance on it, but it still took 2 years to get it rebuilt and released. And so thank goodness I didn't have everything in that one project. I had spread it out by that point in time over 6 different projects. And so we still had income coming in that met our needs.
And you said, Brad, that you have investments that you select specifically for the Roth versus the traditional. Could you touch on that maybe a little bit further for our audience and what that methodology looks like for you?
In my Roth IRA, the primary asset is a small emerging technology company. It is not publicly traded yet, so it was a private equity placement. And we think it's going to be we think it will be at least a 10 bagger. And maybe it has the potential to do 100 times return of our original investment. So it's clearly high risk. It's early stage, but product is rolling out. It's being sold in retail stores now. The company's getting ready to go international with the product. It's a non-invasive pain pack. And it has had amazing results. And we're in the middle of some additional very detailed clinical studies. So if it ends up going really, really well, clearly you want really, really big return assets in your Roth IRA because they're not taxable. But it still allows you to balance out your overall investment portfolio. It's just my philosophy to put my higher risk, higher return assets in my Roth IRA.
That makes sense. And I'm glad that you brought that up because as our viewers can see here, you obviously have a skill set and a background in real estate, and you feel very confident in real estate investing. But then you also have this opportunity over here in more the medical and healthcare field is what I'm hearing, in a private placement investment. So for our viewers out there, what Brad had done is use his IRA, his Roth IRA, to invest in a private placement in a privately held company. And there are many investors that aren't familiar with the ability to be able to invest in these other types of alternative investments or alternative private placement offerings. And it sounds like that could be a revolutionary product for people in the healthcare medical space. So what a great story. Last question for you, Brad, and an item to touch on is I understand that these IRA investments with the Roth and the traditional have enabled you to do, as well as your background in real estate, have enabled you to do certain things in the community. Can you touch a little bit about some of the things that you're doing from a community perspective?
Well, we were fortunate enough. My wife and I just returned from spending 18 months in Liberia in West Africa. We were serving as missionaries, and the people there are so good and so sweet and so poor. They just, and unless you have been to a deeply third world country, we can try to explain all we want, but unless you've been there, you don't understand just how hard life is for them. And so we have committed to try to assist them with some education programs. And so if we had our money in CDs earning 0.0005%, there's not much we could do to help them. But we are, because of the success of our investments, it allows us to invest in and support educational institutions which can provide online education to college students in Africa. And education is really the only solution to the poverty that so many of those people are dealing with. You know, we came away from that experience with very, very dear friends that still live there. We're in contact with them weekly. And the best way that we can help them is to give them educational opportunities. There's lots of charities, lots of, they need medical, they need housing. There are lots of needs, but we have chosen to support educational organizations that can really change their lives.
That's outstanding. I appreciate that message, Brad, and certainly inspirational for me, and I'm sure many of our viewers. All of these great things that we do in our retirement plans and the investment returns, it's all incredibly positive. But it's more about what does that enable us to do beyond just the return on investment. And we talk about that a lot here, which is going beyond the return on investment and what does that mean to us. And I think you and your spouse are a great inspiration for that and everybody on today's program. So with that being said, again, Brad, thank you so much for taking the time out of your day. I know you're a busy real estate professional there, and you probably have another call to jump to here shortly. So we'll let you get back to that. But once again, really appreciate your time today. And for all of our viewers out there, let's keep leveraging compounding interest in the absence of taxation so that we can make a meaningful impact on our community. Thank you.
Thanks, John.